$10,000 sits in your bank account. It looks safe. It looks secure. You check the balance on your phone and feel a small sense of relief. That number represents months of hard work. It represents skipped dinners, extra shifts, and careful budgeting. It is your safety net. It is your freedom. But right now, while you are reading this, that money is under attack. Not by a hacker in a dark room halfway across the world. Not by a sophisticated criminal syndicate. The threat is much closer. The threat is invisible. And the worst part is that you are likely inviting it in. There is a specific mistake that millions of people make every single day with their savings. It is not a complex error. It is not a technical glitch. It is a fundamental misunderstanding of how modern banking works and how your money is actually protected. This mistake does not just cost you interest. It does not just cost you purchasing power. In the wrong circumstances, it can cost you access to your own funds when you need them most. It can leave you stranded. It can leave you vulnerable. And by the time you realize what has happened, the damage is already done. You cannot undo it. You cannot call customer service to fix it. You cannot sue your way out of it. The window for protection has closed. Most people believe that having money in the bank is the same as having money in their pocket. They believe that if the number is there, the money is theirs to use whenever they want. This belief is dangerous. It is the illusion created by decades of stability that we are slowly taking for granted. But the rules have changed. The environment has changed. And if you are holding $10,000 or more in a standard checking or savings account without understanding the hidden risks, you are playing a game you do not even know you are losing. The mistake is not about spending too much. It is not about buying the wrong stocks. It is about where you keep your money and how you think about its availability. Let's be clear about what is at stake. $10,000 is a significant amount for most families. It is an emergency fund. It is a down payment. It is a tuition deposit. It is the buffer between stability and chaos. When that buffer is compromised, life becomes incredibly difficult. Yet, the vast majority of people treat their bank accounts like static storage units. They deposit the money and forget about it. They assume the bank is a vault. But a bank is not a vault. A bank is a business. And like any business, it operates with its own interests, its own risks, and its own limitations. When you deposit your money, you are not putting it in a box with your name on it. You are lending it to the bank. In exchange, they promise to give it back to you when you ask. This seems simple. It seems guaranteed. But there are cracks in this system that most people never see until they fall through them. These cracks are widening. Economic uncertainty, regulatory changes, and digital vulnerabilities are creating a perfect storm for the average saver. If you do not understand these dynamics, you are exposed. You are walking blindfolded into a situation that could strip you of your financial security in a matter of hours. If you care about protecting what you have worked so hard to build, take a moment to subscribe to this channel. We dig deep into the hidden risks that threaten everyday people, and we provide the clarity you need to stay safe. This is not about fear-mongering. It is about awareness. It is about giving you the tools to protect your family and your future. By staying informed, you are taking the first step toward true financial security. Now let's look at the first layer of this mistake. It starts with the concept of liquidity. Liquidity is a fancy word for how quickly you can turn an asset into cash without losing value. Cash in your hand is perfectly liquid. A house is not. You cannot buy groceries with a bedroom. You have to sell the house first, which takes time and money. Bank accounts are supposed to be liquid. You swipe a card and the money moves. But here is the truth that banks do not advertise. Your access to that money is conditional. It depends on the bank's systems working. It depends on the bank having enough cash on hand. It depends on the government's insurance limits. And it depends on you not triggering any automated security flags. Consider this scenario. You have $10,000 in your primary checking account. You need it for a medical emergency. You go to withdraw it, or perhaps you try to transfer it to pay a bill. Suddenly, the transaction is declined. Or worse, the account is frozen. You call the bank. You are put on hold. You speak to a representative who tells you that your account is under review. Why? Maybe because of a large deposit you made last week. Maybe because of a pattern of spending that looked unusual to an algorithm. Maybe because the bank itself is facing liquidity issues and is restricting withdrawals to preserve its own cash reserves. This has happened before. It is happening again in different forms around the world. When a bank freezes your account, your $10,000 is still there. The number on the screen has not changed, but you cannot touch it. You cannot use it. It is gone for all practical purposes. You are left with zero usable funds. Bills still come due. Rent is still owed. Food still needs to be bought. But your money is trapped behind a wall of bureaucracy and risk management protocols that do not care about your personal crisis. This is the first danger. The assumption that access is guaranteed. It is not. Access is a privilege that can be revoked instantly. But that is not even the worst part. The second layer of this mistake is even more insidious because it happens slowly, silently, and invisibly. It is the erosion of value through inflation and low interest rates. While your $10,000 sits in a standard savings account, earning 0.01% interest, it is losing value every single day. This is not a theory. It is mathematics. If inflation is running at 3 or 4% and your bank is paying you nothing, you are effectively losing hundreds of dollars a year. Over 5 years, that $10,000 might still look like $10,000 on your statement, but it will only buy what $8,000 or $9,000 used to buy. You are bleeding wealth. You are working hard to save, but the system is designed to keep you poor. Banks make billions by lending your money out at high interest rates while paying you pennies. They profit from your ignorance. They profit from your inertia. They know that most people will not move their money. They know that most people are too busy, too tired, or too confused to shop around for better options. So they keep your money cheap. They keep it stagnant. And they count on you not noticing. This is where people go wrong. They think that keeping money in a big famous bank is safe. They think that brand recognition equals security. But in the modern financial landscape, brand recognition often means higher fees, lower interest rates, and more bureaucratic hurdles. The big banks do not need to compete for your deposits because they have your habit. They have your direct deposit. They have your automatic payments. They have your loyalty. And they reward that loyalty with neglect. Meanwhile, smaller institutions, credit unions, and online-only banks are fighting for your business. They offer higher yields. They offer better service. They offer transparency. But most people never switch. They stay in the default option. They stay in the trap. And every month they stay, they lose more ground. This is a slow-motion disaster. It does not feel like an emergency. It feels like normal life. But it is draining your potential. It is stealing your future. If you want to stop this bleed, you must wake up. You must realize that your money is a tool, and it needs to be placed where it can work for you, not against you. If you are finding this information valuable, please hit the like button. It helps us reach more people who need to hear this message. It signals to the algorithm that this content matters, that financial literacy is a priority, and that we should continue producing these deep dives. Your support helps us keep this channel independent and focused on your best interests. Now let's go deeper into the third layer of the mistake. This is the part almost nobody is prepared for. It involves the Federal Deposit Insurance Corporation, or FDIC. In the United States, the FDIC insures deposits up to $250,000 per depositor, per insured bank, for each account ownership category. This sounds reassuring. It sounds like your $10,000 is completely safe. And technically it is. If the bank fails, the government will pay you back. But here is the catch. The process is not instant. When a bank fails, it is usually seized by regulators on a Friday afternoon. The bank closes. Your debit cards stop working. Your online banking goes offline. You are cut off. The FDIC then steps in. They may create a bridge bank. They may sell the failed bank to another institution. This process can take days, weeks, or even months. During that time, your money is in limbo. You may be given limited access to some funds, but it is not guaranteed. It is not automatic. It is the administrative process. And if you have multiple accounts, or if you have joint accounts, or if you have trusts, the calculation of your insurance coverage can become incredibly complex. Many people believe they are fully insured when they are not. They spread their money across different accounts at the same bank, thinking each account is insured separately. It is not. The insurance is per depositor, per bank. If you have 3 accounts with $10,000 each at the same bank, you are insured for the total $30,000. But if you have accounts at different banks, you are insured separately at each one. This distinction is critical. If you do not understand it, you could be exposed. And even if you are insured, the inconvenience of a bank failure can be devastating. You cannot pay your mortgage with an insurance claim. You cannot buy food with a promise of reimbursement. You need cash. You need access. And when the system breaks, access is the first thing to disappear. This brings us to the fourth layer, which is the digital vulnerability. We live in an age where our entire financial lives are managed through apps and websites. This is convenient. It is also risky. Cybercrime is exploding. Phishing scams are becoming indistinguishable from real bank communications. SIM swapping attacks allow criminals to take over your phone number and bypass two-factor authentication. Once they have access to your online banking, they can drain your account in minutes. And while banks often reimburse victims of fraud, the process is not easy. It is stressful. It is time-consuming. It requires proof. It requires police reports. It requires weeks of investigation. During that time, your account is frozen. Your money is gone. You are fighting to get it back. And if the bank decides that you were negligent, that you shared your password, that you clicked a link, they may deny your claim. You are left with nothing. The burden of proof is on you. The system is stacked against the consumer. Having $10,000 in a single account makes you a target. It makes you worth the effort. Criminals scan for accounts with significant balances. They look for weak security. They look for complacency. If you are not vigilant, if you are not using hardware keys, if you are not monitoring your accounts daily, you are leaving the door open. What happens next is worse. The psychological impact of losing access to your money or seeing it drained is profound. It creates anxiety. It creates distrust. It creates a sense of helplessness. You start to question every transaction. You start to fear every email. You lose peace of mind. And peace of mind is priceless. You save that $10,000 to feel secure. But if it is sitting in a vulnerable place, it is doing the opposite. It is making you anxious. It is making you fragile. This is the ultimate cost of the mistake. It is not just the financial loss. It is the emotional toll. It is the sleepless nights. It is the strain on your relationships. It is the feeling that you are not in control of your own life. And this is entirely preventable. You have the power to change this. You have the power to structure your finances in a way that minimizes risk, maximizes access, and protects your value. But you have to act. You have to move. You have to stop treating your bank account like a dumping ground and start treating it like a strategic asset. So what is the solution? How do you fix this mistake? The first step is diversification. Do not keep all $10,000 in one place. Spread it out. Keep a small amount in your primary checking account for daily expenses. Keep the rest in a high-yield savings account at a different institution. This reduces your exposure to any single bank's failure. It reduces your exposure to any single technical outage. It gives you options. If one bank goes down, you have another. If one card is blocked, you have another. This is basic risk management. It is what wealthy people do. They do not keep all their eggs in one basket. Neither should you. The second step is to maximize your yield. Move your savings to an institution that pays a competitive interest rate. There are many online banks and credit unions that offer rates 10 or 20 times higher than the big traditional banks. This is free money. It is compensation for your loyalty. Take it. Use it to offset inflation. Use it to grow your wealth. Every dollar you earn in interest is a dollar you do not have to work for. It is a small step, but it adds up. Over time, it makes a significant difference. The third step is to enhance your security. Use strong, unique passwords for every financial account. Enable two-factor authentication using an authenticator app, not text messages. Consider using a hardware security key for added protection. Monitor your accounts daily. Set up alerts for every transaction. If you see something suspicious, act immediately. Do not wait. Do not assume it is a glitch. Assume it is a threat. Report it. Freeze your account. Protect yourself. Be proactive. Do not rely on the bank to save you. The bank is a business. Its primary goal is profit. Your goal is security. These goals are not always aligned. You must be your own advocate. You must be your own defender. This mindset shift is crucial. It changes everything. It turns you from a passive victim into an active participant. It gives you control. It gives you confidence. Share this video with someone you care about. Send it to your parents. Send it to your siblings. Send it to your friends. They may be making the same mistake. They may be vulnerable. They may not know. By sharing this, you are helping them protect themselves. You are spreading awareness. You are building a community of informed, empowered individuals. This is how we create change. This is how we protect each other. Do not keep this knowledge to yourself. Pass it on. Let's lift each other up. Let's make sure that everyone we love is safe from these hidden dangers. Now let's talk about the mental aspect. The fear of loss is powerful. It can paralyze us. It can make us afraid to move our money. It can make us stick with what we know, even if what we know is harmful. But the fear of inaction should be greater. The cost of staying still is certain. The cost of moving is manageable. Yes, switching banks takes time. Yes, setting up new accounts takes effort. Yes, learning about security takes attention. But these are one-time costs. The benefits are lifelong. The protection is permanent. The peace of mind is invaluable. Do not let fear keep you trapped. Let knowledge set you free. Understand the system. Navigate the risks. Take control. You have the power to secure your financial future. You just need to use it. There is one more thing to consider. The landscape is changing. Digital currencies, decentralized finance, and new financial technologies are emerging. These are not replacements for traditional banking, but they are alternatives. They offer different risks and different rewards. You do not need to dive in head first, but you should be aware. You should understand what is happening. Ignorance is not bliss. Ignorance is vulnerability. Stay curious. Stay informed. Keep learning. The more you know, the safer you are. The more you understand, the better decisions you will make. This is a journey. It is not a destination. It is a continuous process of adaptation and improvement. And you are not alone. There are resources. There are communities. There are experts. Use them. Lean on them. But always verify. Always think critically. Always protect your interests. As we wrap up, remember the core lesson. Having $10,000 in your bank account is not enough. It is not a finish line. It is a starting point. It is a responsibility. You must manage it. You must protect it. You must grow it. Do not let it sit idle. Do not let it rot. Do not let it be taken. Take action today. Check your accounts. Review your security. Compare your interest rates. Make the switch if necessary. It might seem small. It might seem insignificant, but it is not. It is the foundation of your financial health. It is the bedrock of your security. Build it strong. Build it smart. Build it to last. The mistake of complacency is costly. It costs you money. It costs you time. It costs you peace. But it is a mistake you can fix. Right now, in this moment, you have the information. You have the tools. You have the power. Use them. Do not wait for a crisis to teach you this lesson. Learn it now. Apply it now. Benefit from it now. Your future self will thank you. Your family will thank you. You will thank you. This is not just about money. It is about freedom. It is about choice. It is about living life on your terms, not on the terms of a bank algorithm or a criminal syndicate. Take back control. Secure your assets. Protect your future. Thank you for watching. If this video opened your eyes, if it gave you a new perspective, if it helped you see the risks clearly, please subscribe. Join our community of thinkers and protectors. We are here to help you navigate the complex world of finance with clarity and confidence. We are here to help you avoid the mistakes that cost thousands. We are here to help you build a secure, prosperous future. Hit that subscribe button. Turn on notifications. Stay ahead of the curve. And remember, your money is your life. Treat it with the respect it deserves. Protect it with the vigilance it requires. Grow it with the wisdom it demands. You can do this. You are capable. You are ready. Go out there and take charge. The time is now. The opportunity is here. Do not let it slip away.